Hello, today we are solving Jan 2025 paper question number unit 2 question number 5. You are the accountant for HK Coolers PLC, a company that produces and sells refrigerators. Okay, financial statements are drawn up using marginal costing and absorption costing. The following information is available at the end of the year 31st December. They have given information about the opening inventory units, then inventory valuation due as per the marginal costing and as per the absorption costing methods, and you have the production and the sales units for the 4 quarters, and you have the fixed overheads and other cost, okay, given here. Then the first part A is prepare for HK Coolers PLC statement of profit and loss and other comprehensive income for the year ended 31st December 2024 in columnar format using marginal costing and absorption costing. So if you have used marginal costing, okay, what is the statement and profit and loss you will have in the company, and as well as if the absorption costing, okay, based on that we will calculate the statement of profit and loss, okay, and then this is what that is required. So the general format, okay, is always the revenue and you will have some costs, okay. So the revenue and minus the cost will give you the profit, okay. This is the general format. So in this you will have some opening inventory, okay, and some cost of sales, and then less the closing inventory, okay. So let's calculate. This is the general format. So general format, so opening inventory plus purchases production cost minus the closing inventory, it's going to give you some cost of sales, and then you will have to calculate contribution for the marginal costing, and then you have the rest of the costs expenses are incurred, and then revenue minus this total cost will give you the profit. So the first one is the marginal costing for the revenue, okay. Let's see, okay, here they have given the production and the sales units per quarter for the ended 3-month period, okay. Here they have given the for the 4 quarters. So revenue, let's calculate the revenue is going to be equal to revenue, okay, is going to be equal to the total sales number. Here whatever the sales unit they have given, you have to include all the sales number. So and so total sales unit, okay, that is equal to 8907, okay, 8907 plus 13,007, okay, 13,798 plus 13,789 plus 12,351, okay, plus 9853, okay. So these are the total sales unit, that is equal to 44,900 units. So you add up all this and you get the total units. Now the sale rate, okay, or the rate or the price, sale price, okay, is equal to, here they have given sale price is 99 pounds per unit, okay, that is the sale price. So revenue is going to be equal to sale price, okay, sale price times the sale units, okay, total sale units. Total sales unit, so that is equal to 99 pounds, okay, 99 pounds times the number of units, that is 44,900 units, okay, 44,900 units. So this you will multiply, okay. So that is equal to 444, okay, 444,5100, okay, 444,5100. So this is the total revenue. The revenue is going to be the same for both of them, only for the costing it is going to change as per the marginal costing and absorption costing, it's going to change, okay. So now the absorption costing is going to include all the costs, whereas marginal costing is going to include only the variable costs. Okay, so that is the difference. Now next one is the opening inventory. Opening inventory is equal to 224 units. Now what is the price? Okay, we have to see the price. So let's include that. So opening inventory is equal to 224 units. Okay, 224 units, and the as per the marginal costing, okay, it is valued at 65 pounds per unit. So marginal costing, it is equal to 65 per unit. So opening inventory cost is going to be equal to opening inventory units, okay, quantity times the cost. So 224 units, 65 pounds per unit, okay, times 224, okay, units, times 224 units. So that is equal to 14560. Okay, 14560. This is for the this is for the marginal costing. Okay, now for the marginal costing, now for the absorption costing, the unit is this much. So for the absorption costing, it is the thing, the inventory units remain the same. So opening inventory cost, okay, opening inventory cost for as per the absorption costing will be equal to 75 pounds per unit times the quantity, so times 224 units. So usually they will ask you to calculate what is the absorption costing and marginal costing. Here they have already calculated, okay, and because of that here we are asked to prepare the profit and loss statement. So that is equal to so that is equal to 75 times 224, okay, that is 16,800 pounds. So now let's put it here. So the opening inventory is going to be 14,560. Okay, so the opening inventory is going to be 14,560, and for the absorption costing, the opening inventory cost is going to be 16,800. Then we have the production cost. So let's calculate the production cost. First one is the direct materials. So we have to calculate what is the total number of production units that has happened, okay, production units that has been manufactured by the company. So total production units, so is equal to the total production units, okay, is equal to for the entire year is 10,009, okay, 10,985 plus 12,172 plus 11,763 plus 10,080. So you have to add up all the units for the entire year. That will give you the total number of units, production units. It is 45,000 units, okay, that has been produced. So now we have the total production units, okay. Now let's calculate what is the direct material cost. Any cost, okay, direct material cost is equal to the rate times the quantity produced. So and then now we have to calculate those values. So now let's calculate each of these costs. First one is the material, direct material cost, okay, direct material cost. So that is equal to, we can see that the material cost, the rate is 56, okay, material cost is 56.10. The number of units, we saw that it was produced, the production cost, okay, so the production cost of 45,000 units, 45,000 units times the rate. Okay, that is the direct material cost. So this is the total production units. So any cost in general formula you will have to remember cost is, here the direct material cost is going to be direct material cost is going to be equal to its rate, direct cost per rate, direct rate, direct, okay, that is the direct material per unit, direct materials per unit at this rate times total production unit, okay, which is 45,000 units. Okay, so that is a formula for the direct material cost. So that is equal to 25245. So that is equal to 252, okay, 252 4 500. That is the total material production cost. Now for the absorption costing also this remains the same. Okay, the same, it is the same production cost. Then direct labor cost, we can see that they work for 45 minutes work per unit at a wage rate of 9.6 per hour. So again the total number they have produced is 45,000. Okay, and if they work for 45 minutes, okay, if they work for 45 minutes, so convert it into hours by dividing it with 60 and then multiply at the rate of 9.6 pounds per hour. Okay, this is the direct labor cost. Okay, this is the direct labor cost. So that is equal to 3 to 4,000. Okay, 3 to 4,000, and this is also going to be the same for the absorption costing. Okay, 3 to 4,000. Now we have the semi-variable cost. Semi-variable cost has two parts. One is 2,700 a fixed cost per week plus 6.70. This represents the variable cost. Okay, it is at 6.7. Now the total production that has happened is 45,000. Okay, that is 45,000 units, but the rate for the semi-variable cost is at 6.7, right? So let's write that. So the total, this is at 6.7. So 6.7. So that is a semi-variable cost. It is at 301,500. So 301,500. This is also the same for the absorption costing. Now for this, okay, for this let's calculate the total production cost. Okay, so that is equal to 2,524,500, okay, plus 324,000 plus 301,500, that is equal to 3,150. So 3,150,000. Okay, for this the total production cost comes here. Okay, so now less the closing inventory. Now let's calculate the closing inventory. So the closing inventory is going to be equal to, okay, for the marginal costing we have to include all the variable costs. Let's calculate the closing inventory here. Okay, closing inventory. Okay, closing inventory for the marginal costing and for the absorption costing, they will be calculated in a different way. Okay, so for the marginal costing, it is equal to the closing inventory cost. Okay, the closing inventory cost is always going to be equal to the number of units, okay, in units times the rate So now the first one is the unit. Okay, we have to calculate the units. The closing inventory units is going to be equal to, let's calculate the closing inventory units. That is equal to opening inventory. Okay, that is equal to the opening inventory minus plus production units. Opening inventory plus production units minus the sales unit. So that will give us the closing inventory units. So the opening inventory unit, okay, the opening inventory units, we know it was 224. Okay, so it was 224 units plus the production units, we calculated it was at 45,000 minus the sales unit, which was at 44,900 units, 4,900. So that is going to be equal to 324 units. So this is either closing inventory, this is the closing inventory units. So for both the marginal costing and the absorption costing, the closing inventory units is going to be the same. Okay, closing inventory units. So that is equal to, okay, that is equal to the marginal costing, the closing inventory cost is going to be equal to the closing inventory units, that is 324 times the rate. The rate is going to be calculated as the variable rates we are going to include. What are the variable rate here? 6.7 plus, okay, 56.10 plus we have the another variable rate 9.6. okay, so these are the variable rates you will include, and this rate 9.6 at the rate of 45 by 60. Okay, so 45 minutes per 60. These are the rates per unit we have to calculate. This represents rate per hour, so we have to include this 45 by 60 also. Okay, so to get everything as the rate per unit, okay, we have to calculate. So that is equal to 324 times, so let's add up 6.7 plus 56 plus 9.6 into 45 by 60, that is equal to 70 pounds. Okay, so this value is going to be equal to 70 pounds. So now 70 pounds, and this is units. So this will give us the closing inventory cost, that is equal to 22,680 pounds, 22,680 pounds. So now let's write this value, okay, for the marginal costing. So for the marginal costing less the closing inventory is going to be equal to this much. Okay, now we have, okay, now we have the for the absorption costing. Okay, let's calculate the total closing inventory cost. The closing inventory cost is going to be equal to the 324 units, okay, times, it has both the fixed cost and the variable part, okay, variable cost. So it will or it will include all the variable costs, okay, or it will include all the variable costs, plus we have to include the fixed cost per unit also. So fixed cost per unit, let's calculate here. So 5,400 per week, okay, it is week, into they are working for 50 weeks, okay, per unit we have to find fixed cost per unit. So divided by the number of units, total number of production units, that is 45. So that will give you fixed cost per unit, okay. So this is fixed cost per unit. Then we have another fixed cost here, it is 2,700. So the another fixed cost, so plus 2,700 times 50, okay. So this is for 50 weeks, and the number of units is 45,000 units. So this will give the rate, okay, per unit, fixed rate per unit. So fixed rate per unit we are calculating, okay, fixed rate plus the variable rate per unit. So 70 pounds represent, this represents the variable, okay, this is going to represent the variable rate per unit, okay, the total variable rate per unit. And this portion, okay, this that is equal to 70, that is equal to 70 pounds. So a closing inventory for the absorption costing will only include closing inventory into the marginal rate, okay, marginal rate, which has only, it has only variable rates, okay, variable rate per unit, okay, it has variable rate per unit. And whereas the closing inventory cost for the absorption, okay, for the absorption costing, it is going to be equal to the closing inventory for the absorption costing, okay, it is equal to absorption rate, okay, absorption rate will usually include fixed rate plus variable rate per unit plus the fixed rate per unit, okay, fixed rate per unit. Now we know that variable rate per unit is equal to, we have already calculated, the variable rate per unit was around 70 pounds, okay, this was the variable rate per unit. And what is the fixed rate per unit? The fixed rate per unit is going to be equal to, fixed rate per unit you have to calculate using all this, okay, the number of the rate, the given that fixed overhead cost per week is given, and they work for 50 weeks in a year, divided by the total number of units produced. So that is equal to, so let's calculate this. So 5,400 into 50, okay, 50 divided by 45,000, 45,000, that is equal to 6 pounds, okay, this value is going to be 6 pounds plus, and this one 2,700 into 50 divided by 45,000, that is equal to 30. So 30, so you have to add all of this, so that is equal to 324 units, okay, units times 70 pounds, okay, 70 pounds plus 6 pounds, okay, and that is equal to 36 pounds. Okay, let's write here the fixed rate per unit is, total is 36 pounds. So let's write it here, it is equal to 30 pounds and 70 pounds, okay, 30 and 70, 30 and, okay, one second, so 2,700 into 2700 into 50 divided by 45,000, that is equal to 3 pounds. Okay, divided, that is equal to 3 pounds. So this becomes 9 pounds. So 6 plus 3, that is equal to 9 pounds. Okay, so this is equal to 9 pounds. Okay, was the fixed rate. So fixed rate is 9 pounds. So we have to include absorption costing, okay, which has the fixed 324 units into 70 pounds, which is the fixed rate per unit, which is the variable rate per unit, and the fixed rate per unit we had calculated 6 pounds plus the 3 pounds. So that is equal to 9 pounds was the fixed rate per unit. So we have to include all that. So 324 times 79 pounds, that is equal to 25,596. So that is equal to 25,596 pounds. Okay, so this is going to be your closing inventory cost as per the absorption costing. Now let's calculate the cost of sales for the marginal costing, which is, okay, 14,560 plus the total production cost 3,150,000. Okay, 1000 minus 22,680. So that is equal to 3,141. So it is equal to 3,141,880. Okay, this will be for the marginal costing. For the absorption costing, you still have to include all other cost and then get the profit. Okay, so then what is the contribution as per the marginal costing also you have to include. Okay, and that is equal to this revenue minus cost of sales, which we have calculated. So let's calculate that. Revenue minus this cost of sales, minus 445,100. So that is equal to 1,303,220. Okay, so the contribution cost is going to be 1,303,220. Okay, then we have the semi-variable cost. We have to calculate the semi-variable cost is around 2,700, and we have to include the number of units, that is equal to, they work for 50 weeks. Okay, so fixed cost we have to include that. So let's include that portion, that is equal to semi-variable cost, which is fixed portion, that is equal to 2,700 into 50 weeks. So that is equal to 50, that is 135,000. Okay, so that cost will be the same for both of them, 135,000. Okay, 135,000. So this is also for the absorption costing. Then we have the fixed overheads. Fixed overheads, we saw that it is 5,400 per week. So number of weeks worked is, okay, 5,400, number of weeks is 550. So that is equal to 5,400 into 50. So that is 270,000 cost. Okay, so the total fixed overhead cost is 270,000. So 270,000. Now let's calculate the total cost. Okay, total cost. The total cost, okay, the total cost as per the marginal costing is going to be equal to total cost for the marginal costing is equal to, it is the cost of sales plus the fixed cost plus overhead cost. Had already cost of sales, so 3141,880, okay, 880 plus the fixed cost 135,000 plus 270,000, that is equal to 3546880. 3546880. 3546880. Now cost for the absorption costing, the total cost formula will be equal to costing, okay, the total cost is going to be equal to opening inventory, okay, opening inventory minus the closing inventory plus all the direct costs plus the fixed cost plus fixed overhead cost, okay, fixed cost, okay, all the fixed cost and the semi variable costs and direct costs, okay. So semi variable var variable plus semi variable fixed plus the fixed overhead production, okay, plus fixed so you will add up all the costs, direct costs, okay, you will add up all the direct costs 2524500 plus the labor cost plus semi variable cost plus you will add up semi variable fixed cost also plus the fixed overhead cost, and then you will add the opening inventory and subtract the closing inventory, so that is going to give you the total cost for the absorption costing. The thing is 46, so if we add 3546200, now the profit is going to be equal to revenue minus the total cost. So let's calculate the revenue, okay, it is 445,100 minus 3546880, so that is going to be equal to 898,220, okay, 898,220. Now let's calculate for the absorption costing. It is 44445,100 minus 3546204, 3546204, that is equal to 898, okay, 898,896.